Welcome to our presentation about the Volkswagen Group. The company was founded in 1937 in Germany. Throughout the years, it acquired several car companies such as Seat, Porsche, Skoda, among others. There is not a single owner. It is distributed among three main shareholders, which are the state of Lower Saxony, the Porsche family, and the Emirate of Qatar. Volkswagen Group consists of two different divisions, the automotive division and the financial services. The financial statements, which we will present later on, were prepared by using the International Financial Reporting Standards.
The balance sheet is the financial document that outlines the financial situation of the business. Volkswagen uses vertical presentation for the balance sheet that consists of 5 sections: assets, non-current and current, equity, and liabilities, non-current and current. The assets are recorded in the ascending order of the liquidity, meaning that the most liquid one will be at the bottom. Similarly, liabilities are recorded based on their maturity date, with long-term being at the top and short-term at the bottom. Intangible assets in the balance sheet show a significant proportion of non-current assets, around 80 billion euros. Given that Volkswagen is a car manufacturing company, property, plant, and equipment play a big role in the non-current assets, being 64 billion euros, as well as inventories in the current assets that shows the company's stock, and that are 52 billion euros. Financial services receivables are 62 billion euros, which is the amount Volkswagen will receive from its debtors, for example, from leasing. In the equity section of the balance sheet, equity attributable to Volkswagen AG shareholders and hybrid capital investors occupy the majority of space, being nearly 170 billion euros. This refers to the direct ownership of the subsidiary companies. Secondly, retained earnings, money the company keeps within the business after the taxes, accounts for 140 billion euros. It is notable, however, that the other reserves show a negative number, meaning Volkswagen has decreased the reserves that are not mandatorily required. On the other hand, however, in the liability section of the balance sheet for both non-current and current liabilities, financial liabilities are the ones that contribute the most. Those are the long and short-term debt that Volkswagen needs to pay, being 120 and 80 billion euros respectively. From the graph below, we can see that the balance sheet is balanced, where total assets equal total liabilities plus net equity, and while non-current assets represent the majority of total assets, liabilities and equity represent 1/3 each.
We are now going to talk about the income statement. The income statement shows the economic situation overall performance of the company, recording the net income for a reporting period resulting from revenues and expenses. The first section comprehends the sales revenue, mainly made up by car sales, but also from car components and leasings. Thereafter, the removal of costs reached a gross result of 47 billion euros. Next, we can find the operating result that derived from the removal of expenses, mainly made up by personnel costs from the gross profit. Next, financial expenses, intended as interest. An unusual aspect is the interest income coming from the adjustment to discount rates from creditors. After interest, we get to taxes. After both of these are removed, we get the net earnings. Lastly, for net income, the earnings are represented as a per share and are divided between investors and shareholders of Volkswagen. It can be seen that the number for preferred share is higher than ordinary share, and this is because preferred shares are entitled to 0.06 euros more dividends according to the Article of Association.
In 2022, Volkswagen realized profits of approximately 16 billion. This achievement combines diverse financial components like substantial distribution costs of 19.8 billion and administrative expenses amounting to 11.7 billion. Additionally, it highlights other financial results, including losses related to the Russia-Ukraine conflict. In terms of income taxes, the statutory corporation tax rate in Germany was 15%, resulting in a 30% aggregate tax rate with various adjustments. We are coming to the end of our presentation. Thank you for listening.